Get ready. The guy that will put your fears behind you is on the air now. Taking calls at 713-785-1817. Toll free 877-881-0271. Now here's your host, Jason Bible.
Hot mics.
Welcome to the show. Jason Bible, Right Path Real Estate. Sorry I started the show a little late there on Facebook. I started dancing, doing all my stuff. I'm listening to the financial news right now. Great. Oh my gosh, guys. Great lessons to be learned. Great lessons to be learned. I love when the market implodes like this. Everybody looks like a genius when the market increases. Everybody looks like a genius when times are good. You can always determine one's character when there is real trouble afoot. By the way, it's a show about real estate and real estate investing, and we'll get to that here in a minute. But there are important life lessons to be learned right now. I've got a lot of friends of mine that are in the military, in law enforcement. Some are first responders in the healthcare side, EMTs, those sorts of things. The first responder crowd. And all of those guys and gals have told me, said, look, Jason, we send people through the training. And a lot of these folks have been doing it so long, they are now trainers at a very high level. And they'll tell you, look, you can take somebody, you can bring them in, you can train them. They can do all of the skills in which to be a high-level practitioner. SWAT training, Special Forces training. You can do all that stuff. I mean, these people know how, high-level professionals, high-level skill set. But he said there's a small group of these folks that when you put them in the field, all that training goes right out the window. They say all the right things, they do all the right things, but when it comes game time, they just don't, whatever happens, they just mentally can't process all that. And the reality is that in these high stress, high risk, high stakes fields, you've got to have somebody that's got the skill set that can also perform in extreme risk. Those are really, we really get down to it. Those are the best of America, right? You guys got to see some of that, in person in your front yard during Hurricane Harvey. We also know that in times of extreme stress, that's when you meet the truth. The truth has a tendency, the truth kind of hides out there when times are good. But when things get ugly, that's when people come to reality, is in times of stress, when truth just smacks you in the face. There's a very instructive lesson in politics right now. Look at the things that some of these politicians are doing simply because Trump is now president. It's amazing. Now let's talk about the markets. I just watched a great video. It's so instructive. There's a link to it on the Drudge Report. I'll give you the place that it's at now. The article, I'll tell you what the article is, but you can get to it from the Drudge Report. The article is in Market Watch. So if you're going over to Market Watch, you're looking for an article titled, Jim Cramer Blames a Group of Complete Morons for Blowing Up the Market. Jim Cramer blames a group of complete morons for blowing up the market. Now, let me tell you who Jim Cramer is. Jim Cramer is a bloviator. It's probably the best way to put it. He's a guy on the radio that gives his opinion on stocks and bonds and mutual funds and companies and gets CEOs and hedge fund managers and all that stuff on his show. He's the one that says booyah and throws those stupid Red Bulls at the... he's that guy. He's the stock market guy. In fact, they made a movie. They made a movie based off his show. They took some artistic license with it. That's got George Clooney in it. I can't remember the name of the movie. It's really good. You guys ought to watch that movie. Somebody will tell me on the Facebook feed the name of the movie. It was fantastic. But he's that guy. Gets up and screams and says, buy this stock or sell this one. And he's freaking out right now. He is freaking out. Why? Because the market's going down. Actually, it's not because the market's going down. He's scared because he can't predict what the market's going to do. And so he goes on this 5-10 minute tirade here. There's a video, and you've got to watch it, where Jim Cramer blames, quote, morons for messing up the market. In other words, unsophisticated investors for blowing the market up, unlike himself, right? Because he's an educated investor. He knows what's going on in these markets. But it's all the uneducated plebes like ourselves that are goofing up the market. I'll tell you, nothing could be further from the truth. The volatility you're seeing on these markets right now is based on a handful of algorithms that have enough volume in dollars that they're really swinging the market back and forth. The fascinating thing is in this video, he starts talking about the fundamentals of these companies. Yet he doesn't address the elephant in the room. And the elephant in the room is twofold. One is ERISA, and the other one is ETFs. And I'm going to explain some of those things today. The theme of today's show is the herd will not save you. The herd will not save you. And a lot of it has to do with what the herd is doing right now with their money. The herd is great. It's a family of investors. A lot of y'all out there, you listen to this show, you listen to a dozen other shows probably on this talk station. You've probably got a zillion people that listen to this on podcasts. They listen to a bunch of other podcasts in investing. And here's the reality. If you're a real estate investor, by and large, you're an extremely small percentage of the investor market. Like, we're this fringe element out there. These weird people that go out and buy single-family houses and turn them into rental properties. I just love this stat. 8 out of every 10 millionaires do so through real estate. They become millionaires through real estate. They don't become millionaires watching Jim Cramer. They don't. We'd have a meeting. When I was going through business school, I was working during the day and going to business school at night over at HBU, this small private school here in Houston on the southwest side of town off 59. And a couple of us would get together and work out before class. So a lot of times I just show up early, hour and a half, hour and 45 minutes early. And my favorite thing was just get on the treadmill, turn on the business station and business channel, just catch up on what's going on in the market all day. I was risk manager in a healthcare organization, so it's not like I'm sitting there watching the market every day. We're working on a little bit more important things. So I'd fire up the business channel, and of course there's Jim, rant and raving. Now, I graduated my MBA in 2009. So I was going through the MBA program from probably late 2007 through 2008 and 2009. So I was right there in the thick of learning finance at a relatively maybe immediate relative. It was interesting. What you're learning in the classroom was then playing out on TV. And that doesn't really happen in most academic programs because, especially in the business and finance side, most of the time the markets are kind of trucking along, going up. They're really not descending like they had during that time. So it was fascinating to have the academic discussions put up against what's happening in the real world. And I'll never forget when I was watching Jim talk about Bear Stearns and Lehman and all that stuff. And I remember even back then, I remember looking at some of this stuff, looking at some of these, and not just those two companies, but looking at other companies' balance sheets, looking at how you calculate free cash flow, how you evaluate a company and determine what the equity is worth, that it didn't make sense to begin with. It doesn't make sense now. He goes on this 5-minute tirade about understanding the fundamentals of business, the fundamentals of these stocks. And it was fascinating to me because he doesn't even take his own advice.
1 minute.
He's screaming and yelling about how the market's falling apart and it's a bunch of, quote, morons that are doing it. It's not the morons. It's not the plebes like us. It's not the retail investor. It's the guys that you hang out with at the golf course, buddy. It's your fellow hedge fund managers. It ain't us, man. Now, we're going to be the recipients of the downturn. That's always the case with the retail investor. When we get back from the break, we're going to talk about why the herd is not going to save you. It's Jason Bible, Right Path Real Estate.
Are you a realtor or seller that is concerned about the new TRID rules and closing on time? I'm Jennifer Hernandez, Senior Loan Officer at Legacy Mutual
Morning,
Mortgage,
Lindsay.
and we have mastered the
Howdy,
30-day
Jeff.
close. We close on time, accurately.
Hey, Lindsay,
and with
what's this
tons
wine
of
thing you're doing?
communication. You'll have a dedicated
Is this like a little
team,
wine
a
business you got
coordinator,
going? This is
and a
kinda cool.
contract to close associate. Give me a call today at 713-579-3611, and let's talk about how we can help you on your next transaction. NMLS 514497.
Real estate investors, if you're not familiar with Quest IRA, let me tell you what you're missing. We've got free weekly educational classes, networking opportunities, and the ability to tap into trillions of dollars for your real estate investing deals. Come by our office or join us remotely as we simulcast all of our educational classes every Tuesday morning and evening. For more information, call us at 1-855-FUN-IRAs or visit our website at questira.com.
Selecting a foundation company and their product for repair is a lot like a game of chance. You simply don't know what you're going to get. The foundation repair industry as a whole doesn't carry a license, nor is it regulated. However, Foundation Check utilizes professional engineers to review all of our files to give you the best foundation analysis in today's market. Remember to check before every repair. Call 346-702-3825, or you can reach us online at foundationcheck.com.
Are you looking for an investor-friendly general contractor for your investment property? Then call Fast Track Remodeling at 832-742-9992.
Richard, that is a great
Or reach us on
clip.
the web at fasttrackremodeling.com.
I love it.
Fast Track Remodeling specializes in turnkey remodeling of single-family investment properties, whether it's a flip rehab or a rental rehab. No more managing it yourself. No more
Bitcoin.
doing the work yourself. Fast Track Remodeling really does manage it all.
So give us a call today
What kind of
at
headphones are these? These are
832-742-9992.
something fancy. Hold
You
on.
found or inherited a great investment property. Problem is, you don't know how much it's worth, or more
They're
importantly, what to
Audio
do to
Technics,
maximize your
and
investment while mitigating
they
risk.
run.
This is exactly why we started
Just to let you know, these are they run an XLR. They have two outs on or two
specializing in
inputs. They have an X,
investing in
or I guess
We
one output,
understand
one
that
input, an
investors aren't
XLR
just
and
looking for
a
number of what their property is worth, but a
the
comprehensive
big old
analysis
one.
of
Is
the
it a
market.
1/8 or a 1/4 inch
Give us a call at 713-346-9911 or check us out online at nextgenappraisals.com.
As a real estate investor, you rely on your property inspector to determine the current condition of the home and your potential return on investment from an investor's point of view.
Yeah, Lindsay,
Principal
I noticed
Inspections was
you
founded
said
by
it's
investor
sulfate-free
Jeremy
wine,
Humphrey
which
to
is
do just
interesting
that.
because I think
Principal
that's
Inspection
what
works
gives
from
me
the
the.
investor's point
I
of
can have a
view,
couple of
providing
glasses of
affordable,
wine. I
fast,
just don't
quality
feel right the
inspection
next
with
day.
information pertinent to investors while not
I can drink
clouding
10
the
beers
report
and be
with
fine. So it doesn't.
unnecessary details.
Some
Principal
people have said
inspections will
some
save you
folks are
time and money.
sensitive
Call
to the
Principal
sulfate in red
Inspection,
wine.
832-684-5516
Might be one of those guys.
or online at principalinspections.com. License number 21264.
Taxes. Just the sound of that word makes people cringe. At Anderson Advisors, we provide tax reduction through asset protection for real estate investors throughout the country. Our unique philosophy
Do what,
has
Nikki?
CPAs, lawyers,
sorry, I said
bookkeepers,
less
and
than 1
estate
minute.
planners
Oh, okay.
with one common goal, helping you, the real estate investor. Check us out today at AndersonAdvisors.com. And don't forget to tell us you heard about us at Right Path Real Estate.
Are small returns getting in the way of your retirement plans? Why settle for mediocre results? There's a better place to invest. The experts agree. Single-family real estate is one of the best investments you can make. Find out how JB Fund Services offers a 9% preferred return and up to a 13% waterfall. Call us today at 281-915-0906 or visit our website, jbfundservices.com. That's 281-915-0906. This investment is offered to accredited investors.
This is Business 1110.
All right, here we go. Hot mics.
Welcome back. Jason Bible, Right Path Real Estate. The herd will not save you. I'm talking about Jim Cramer's rant today about, quote, morons breaking the market. Nothing could be further from the truth. The retail investor hasn't done a whole lot in this market. When you really get down to it, the retail investor is ERISA and an ETF. And we're going to get to why that's an issue for your retirement here in a moment. I want to go back to Jim's comments. Jim's comments are, the market is all goofed up because a bunch of us plebes have decided to sell stuff. And he makes a comment, I shouldn't even say a comment, a rant in this Market Watch article titled Jim Cramer Blames a Group of Complete Morons for Blowing Up the Market, that you really need to go through and understand. You plebes don't understand. There's this underlying reason why businesses should be worth what they're worth as an equity, and their stocks are worth that because that's what the company's worth. He is wrong, much like he was wrong on his Lehman Brothers call. He is absolutely wrong. In fact, the first comment in this article says it, and I will read it to you verbatim because it's great. It's from Robert Nation. Cramer should listen to his own analysis that stock prices are based on a beauty contest predicated on demand for stocks, not necessarily related to demand for the underlying products or services each company produces, which is why I'm confident in someday selling my tulip bulb collection at a huge profit. He's making a reference there to the tulip bulb crisis, what a lot of people consider the first bubble in asset prices. There's a bunch of books written about it. It's fascinating. But the reality is when have stocks, when was the last time a stock was valued at what the company was valued at? Here's a little pro tip. If you read Benjamin Graham's Security Analysis, who was Warren Buffett's mentor, by the way, if you have not read that book, if you want to be a stock guy, I highly recommend you read that book. If you listen to Warren Buffett and watch what he does, they're two totally different things. Warren has said, hey guys, based on certain fundamentals, stocks have never been cheaper. Yet, his company, Berkshire Hathaway, is sitting on the most amount of cash it ever has. And he ain't out there buying stocks. The secret to Warren Buffett's success is he buys companies at book value. What does that mean? That's a specific accounting term. I want you guys to look that up. Why would you buy something at book value? Which is, for all intents and purposes for this discussion, is the value of the company when you sell all its assets. That's kind of interesting, isn't it? In real estate, we do something very similar. We buy houses for less than what it costs to build them new. I want to say that again so everybody understands that. We buy houses, used homes, pre-owned homes, for less than what they cost to build new. That's why I've never understood being a developer. Never makes much sense to me. Why would I go out and build new homes? Now, if I bought a big plot of land and I was like a real developer where I'm like doing hundreds and hundreds of houses, that makes sense. But I know a lot of real estate investors who think they're investors that are buying lots and putting houses on them or building new construction in a neighborhood that's already established. Why would I do that? Your cost in that is more than just going down the street and buying a house that's already there and fixing it up and selling it or renting it. The trick to being successful in real estate is the same trick to being successful in the equity markets. And that is buy it when nobody else is buying. Buy these assets when nobody else wants them. And who is nobody else in the real estate investing business? When a homeowner doesn't want to buy that house. Homeowner that wants to live in that house does not want a house that is destroyed, that has foundation issues, plumbing issues, it's got roof issues, it's got electrical. The house is a hoarder house. It's full of all kinds of stuff. It's gross and nasty and doesn't smell right, and the AC doesn't run right. I mean, that's the definition of a depressed, distressed asset. People ask me all the time, Jason, they start hyperventilating. Oh my gosh, there's a bubble in real estate. There's a huge bubble in real estate. And I'm like, what's the bubble in real estate? There just is, because prices keep going up. What happens when the bubble pops? Well, what bubble? What you define for me what a bubble means. Well, prices keep going up. Well, prices keep going up for phones and cars and education and the milk you drink and the eggs you buy. And that, I'll take a pro tip here, guys. That's called inflation. That's inflation. That's not a bubble. That's called inflation. Inflation. Assets will naturally appreciate because of the way our economy works. That's not a bubble. Well, Jason, I remember back when you could buy a house in this neighborhood for $50,000, and now it's $250,000. Yeah. And I bet you remember the time when you could buy gas for, 15 cents a gallon. But times they be a changin'. More people are moving to this state. More jobs are getting created. My belief is, and I've said this for about 4 years now, maybe 5. The reason we haven't seen a skyrocketing inflation curve, inflation slope, is because wages have not risen. Guess what happened in January? 2.9% wage growth. That scares the heck out of companies. That's like you just increase their cost of borrowing, i.e. interest, by 2.9%. I can just about guarantee you that a significant portion of what you're seeing in the market, our companies are going, whoa, our cost of labor just jumped 2.9%. And remember, let's go back to Business 101. You guys that are business undergrads, there are 4 components to any business. You need land, you need a place to do business, you need capital, You need a good idea. Some call entrepreneurship, some call value. And what's that last thing you need? The fourth thing. You need labor. The cost of labor in this nation last January just jumped. Why? Employment is down. This is the natural part of the business cycle. We are now about to experience some significant inflation, which also tells me interest rates are going up. I've already shared that with you guys in the last month. There will be 4 rate hikes this year. We are probably going to be sitting at 3/4 to a full point above the end of 2017 by the end of 2018. I don't want to say I'll guarantee it'll happen, but go ahead and bank on it. You landlords out there getting 5.25%, 5.5%, 30-year fixed rate mortgages, if you're still buying rental properties by the end of the year, just go ahead and add a point. Just call it 6.5%, 6.25%. It's coming. Let me put it to you this way. It has to. If we're looking at 2-3% wage growth month over month, you are talking about some rapid inflation. So rates have got to come up. They're coming. This is one of the elements that I warned multifamily investors about for the last 3 years. It is coming. Now, real estate doesn't swing like the stock market does. We're not going to see a 5-point reduction in prices, 5% reduction in prices over 24 hours. That doesn't happen in real estate. Our markets quote, crash or correct, I'll use that in quotes, in much longer time frames. 6, 8, 10, 12, 18 months. They also correct in about the same amount of time. I told you guys starting last year, tail end Q4 2017, this is going to be like 2007, 2008 all over again. I don't think we're going to see a dip as low, but in certain submarkets, we're going to see some rapid changes. And following the herd is going to get you killed. You're going to get trampled by the herd. When we get back from the break, I'm going to talk about the impact of interest rates and real estate. It's Jason Bible, Right Path Real Estate.
Mike's off.
Time is money in a real estate deal. If your insurance company is slow or non-responsive, you could lose a deal like that. You need a quick turnaround on quotes or binders? The agency for that is Benchmark Insurance Group of Texas. The team at Benchmark understands the investor mindset. They know what you need and when you need it.
So, Lindsay, I got to tell you, I'm a big port wine guy, which I hear is unusual when you're under the age of about 65.
Benchmark has been in business for over 10 years, and we insure over 30,000 properties. Contact Benchmark about our exclusive investor package. Call us and let us show you what we can do for you at 281-569-4353. That's 281-569-4353. Or online at benchmarkbroker.com. That's benchmarkbroker.com. That's 281-569-4353. Or online at benchmarkbroker.com.
Do you have cracks in your brick, doors that stick, or sheetrock that's coming apart? Then you may have foundation movement. Due to our expansive soils in the Houston area, it's probably not a question of if you have movement, but when. Call Foundation Check for a truly independent, unbiased foundation evaluation. Foundation Check has been in business since 2009 and has completed over 1,400 evaluations. We're not in the business of repairing foundations or selling you unnecessary peer work, but we are in the business of evaluating your foundation. Our product is designed for house flippers, landlords, or even owner-occupied properties. Each of our files is reviewed by a licensed engineer. Remember to check before ever repair. Call 346-702-3825. That's 346-702-3825. Or you can reach us online at foundationcheck.com. That's foundationcheck.com.
Hi, Clint Coons here, attorney and avid real estate investor. You know, the greatest mistake real estate investors make is not understanding the potential liability that exists from owning real estate. At Anderson Business, Legal, and Tax Advisors, we specialize in protecting real estate investors in all 50 states. In addition to structuring your business for optimum protection, we provide guidance so you pay the least amount of taxes available under the law. We have 150 employees that range from lawyers to CPAs to estate planners and much more. Download our free ebook, The Invisible Investor Strategy, today at AndersonAdvisors.com or call for a free risk reduction analysis and financial blueprint at 800-706-4741. Anderson Business Advisors will help you keep more of what you earn. Call us today at 800-706-4741 and mention Right Path Real Estate.
Did you know that there are over $24 trillion in retirement accounts in the U.S.? Imagine if you could use someone's IRA to fund all of your deals. Well, you can. Quest IRA is based locally here in Houston, Texas. At Quest IRA, we offer retirement accounts that can be used to invest in real estate, promissory notes, private entities, and much more. Many of our clients loan money from their IRAs to fund real estate deals all over the country. We don't sell any investments or give advice. However, we do hold free networking events, weekly educational classes, and free consultations with an IRA specialist. For more information, visit our website at questira.com or call us at 1-855-FUN-IRAs. To tap into the $24 trillion in retirement accounts in the U.S., call Quest IRA at 1-855-FUN-IRAs or go to our website, questira.com.
This is Business 1110.
All right, hot mics.
Welcome back. Jason Bible, Right Path Real Estate. The herd is not going to save you. 8 out of 10 millionaires are not investing in ETFs. They're not investing through their 401k with their company match. They're not. Invested in real estate. Invested in real estate. When someone shared that stat with me years ago, said, hey, Jason, 8 out of 10 millionaires are created through real estate. I was like, what? Excuse me? Yeah, 8 out of 10. I think it's like 7.5 or something like that. 8 out of 10 are in real estate. My next thought was, I guess I got to figure this real estate thing out. They didn't say 8 out of 10 and then the other 2 were in, investing in their employer mandated retirement plan. The other 20%, 20 to 30% own businesses. So 8 out of 10 are in real estate. And then my thought was, well, what if I own a real estate business? Then there's about 100% chance I'll end up as a multimillionaire, which has absolutely happened. So here's what I'll tell you guys. You're going to have to figure this real estate thing out. Now, is it easy and it's not going to take any work? No, there are going to be some challenges there. You have to do some work. It's not going to happen your first year. Now, that's another reality. Oh, Jason, I'm going to take this course. He said I can become a millionaire in 12 months. No, he's lying to you. Maybe you can. I hadn't figured it out. Takes about 2 to 3 years if you're pretty aggressive. Easily less than 5 years. I was chatting with a guy last night. We have a Honda Accord that we just were not driving at all. And I held on to it for another, 2 years? So I had the thing just sitting in the driveway, and it wasn't too bad at our old house because our driveway was big enough and we could just kind of park it to the side, and whoever wanted to drive it, we could drive it. Well, now the way the driveway and the neighborhood, the way we're situated in the neighborhood in our new house, it just, having 3-4 cars at the house, it just makes it a total mess. So took it down to CarMax, which is real interesting. So you guys that are in our Base Camp and Pathfinder group, and Tom, remind me to tell you a part of this story. I'm not going to tell on the radio, but remind me to tell you this story. It's really interesting how they did the offer. And I think there might be some implications that we can make offers, how we make real estate offers in our business. Very, very interesting. Because some things have changed over there. So I'm over there at CarMax, and they're giving me an appraisal on my car, and I'm sitting there chatting with a guy, real nice guy, and he's telling me about the business that he had started years ago. He'd been with CarMax forever, and he was doing a business on the side, in the evening hours, much like a lot of you guys. And it was in the healthcare industry. And I already knew then when he said healthcare, I'm like, oh, this is going to be a terrible story. This is going to end with someone losing a lot of money. Whenever someone says, I'm getting into the healthcare industry, my next thought is, you better have worked in healthcare for like 10 or 15 years. Otherwise, you're going to get obliterated. Healthcare is one of those industries that is so highly regulated that in order to be successful, you will have had to have spent years in it figuring it out. And I knew exactly where this was going. He said, yeah, we thought we'd be up and running in 6 months. 2 years later, we lost all this money, and we still couldn't get our business up and running because of Medicare, Medicaid, some issues getting licensed through them, and all this other stuff. But I look at that, and I'm like, and it was so funny because he asked me, he said, well, how much did you start out with in real estate? I said, $40,000. And he starts laughing. And he said, 40 grand? Like you and your partner put 40 grand in. I said, no, it's worse than that. He goes, what do you mean? I said, we each put $20,000 in. He's like, you got to be kidding me. I said, yeah, we each put $20,000 into the kitty. And in the first 7 deals, we made almost $500,000 in like 6 months. And he's like, you've got to, that's insane. And I said, yeah, it was only 7 houses. I mean, it's not. And he goes, and he's just like, let me tell you what. And he said, well, how did you do that? How much work did it take? So I started explaining to him what our first 6 months looked like. And then he started sharing with me the stories. And it was crazy. But it's not a story. I hear that story often. When people get into businesses outside of real estate, and even building your real estate business, one of the enormous advantages in real estate, and why it's my first business to start, is because the asset is self-collateralizing. That is a huge advantage over any other business. It's huge. I will go on and start other businesses. I can tell you guys that right now. I'm going to be 40 this month. There's no reason for me to stop building stuff. Now, people that are in our base camp at Pathfinder group that are, 50s, 60s, we got some in their 70s. Some of these people just want to build their wealth and income through real estate, and then they want to travel the world and buy a couple houses a year, right? I mean, that's what they're really building. But for a guy like me and some other driven folks in our group, we're trying to take over the world. And you could do that in about 5 years. Houston House Buyers will be 5 years old this year. That's our house buying brand. And we buy 100 houses a year. I can immediately turn that business around. Instead of doing flipping and wholesaling and some rentals, I could turn that thing right around and focus solely on rental properties and buy 100 rental properties in a year. If I really wanted to do that, I could totally do that. And with 100, 200, 300 rental properties, you're pretty much retired. You can go ahead and stick a fork in that bad boy, you're done. In fact, one of the strategies I'm sharing right now at our weekend retreat, in our base camp and Pathfinder groups, with our clients and students and all that, anybody who will sit down and listen for 10 minutes, I'm telling you, buy one house now, buy 2 houses now, and in 5 years, sell one, and you should have enough rental income and equity in that second house to pay off the first house. I'll explain that again. Buy 2 houses, same neighborhood, right next to each other. 5 years from now, sell one, pay off the other. You can totally buy 20 rental properties this year. We got folks in our group that have done it. You buy one. Look, here's the strategy. It's so dead simple, it'll drive you bonkers. Buy 20 houses this year. Rent them out. Don't do anything else for 5 years. Do nothing for 5 years. First year, 20 houses. Year 2 through 5, nothing. Somewhere in year 5 or 7, You're going to look at that appreciation curve and how much those houses have appreciated. Sell 10 of them, pay off the other 10. Now you have 10 free and clear properties. If you've bought them in the right areas of town, you'll make about $10,000 a month net cash flow, net profit with no debt. Here's what's going to happen with interest rates. I promised you guys before the last break I talk about interest rates in real estate. Here's what's happening with interest rates. Interest rates must rise, period. They have to rise. In fact, not only do interest rates have to rise, the stock market has to fall. I'm telling you that right now. The stock market has to fall. Mathematically impossible for it to be where it's at. If you don't believe me, read David Collum's article that he put out at the end of 2017. David Collum, his last name is spelled Collum. He's a professor out at Stanford or Yale. I cannot remember which. Oh, no, I'm sorry. He's at Cornell. He's a chemistry professor in Cornell, or at Cornell. Read, it's a 200-plus page article. And I'll tell you that one of the critical points in that is in 2008 and 2009, when markets fall, because there are market cycles, markets rise, markets fall. It's the natural business cycle in a modern economy, in part because of some of the things the federal bank does and what sovereign banks do and all that. I don't want to get into that in the radio show because it's completely boring and it really doesn't matter because it's not going to change. A lot of people run around, all the libertarians run around and say, audit the Fed. And I'm like, trust me, you don't want to do that. And it's never going to happen. The Fed's going to be around forever and ever. The banking system will not change, guys. So play within the rules you're given. In 2008 and 2009, the economy was not allowed to regress to the mean. What does that mean? Let's say you average a 5 and you're up to 10. Guess what? At some point, you have to go to 0 or 1 to go back to an average of 5. When fiscal and monetary policy stepped in 08 and 09, it completely messed up our mean, the average of what the market should be returning. The market was never given an opportunity to reset, to get back to the mean. What you're going to see in the next couple of years is a regression to the mean.
1 minute.
As interest rates rise. As interest rates rise, banks, lenders, investors are willing to take more risk. Who does a bank take more risk on? A homeowner. Lending standards are still relatively tight. As interest rates rise, you're going to see mortgage loan standards for homeowner borrowers loosen. And it's going to cause significant appreciation in the single-family market. And you can take advantage of that as a real estate investor. When we get back from the break, I'm going to talk more about how that works. It's Jason Bible, Right Path Real Estate.
Mic's off.
Are you expecting to close accurately, on time, and with lots of communication on your home purchase? You've come to the right place. I'm Jennifer Hernandez, Senior Loan Officer with Legacy Mutual Mortgage. Our goal is to give our borrowers and referral partners an amazing experience during the loan process.
Michael, yes, the RV show is this weekend, and we're trying to go.
Our company
I think it's going to rain. We're supposed to do a big bike ride on Saturday, but I think it's going to rain all weekend. So we're going to end up at the RV show.
For you.
I want to go look at some
we have the
Airstreams.
Energy to make this your best home purchase ever. Give us a call today to find out the simple steps to get started. I'm Jennifer Hernandez, the Hernandez team at Legacy Mutual Mortgage. Jennifer.legacymutual.com. or
Yeah.
call
Hey, Jeff.
579.
You guys do long-term mortgages. Y'all don't do just hard money. So what are you guys seeing on the long-term stuff? I'm hearing from my long-term guys. They're expecting 3/4 to a full point by the end of the year. Wondering what you guys are hearing.
As a real estate investor,
Oh, you guys went twice this week? Do they have a bunch of Airstreams there? That's the thing I always worry about is you go to one of these things and they don't carry a lot of Airstreams just because they don't sell a whole bunch.
Working from the investor's point of view, Principal Inspections will give you turnkey inspections that are high quality, affordable, and focused on information pertinent to investors while not clouding the report with unnecessary details. Founder Jeremy Humphrey comes from a family of real estate investors. He started Principal Inspections for investors because as an investor himself, he experienced the need for fast, quality inspections with information directly pertaining to property condition and potential resale value. Principal Inspections will save you time and money. Call Principal Inspections, 832-684-5516. That's 832-684-5516. Or go online to principalinspections.com. That's principalinspections.com. License number 21264.
Are you looking for an investor-friendly general contractor for your investment property? Then call Fast Track Remodeling at 832-742-9992 or reach us on the web at fasttrackremodeling.com.
Fast Track Remodeling specializes in turnkey remodeling of single-family investment properties. Whether it's a flip rehab or a rental rehab, we manage every aspect of a rehab from start to finish with a highly efficient, standardized process.
Over the last 6 years, Fast Track has completed over 700 projects, which has helped us to create our 3 keys to success. Use a detailed scope of work so that everything gets done, train and maintain quality crews so it gets done right, and complete the work in a proper order so it gets done fast.
No more managing it yourself, no more doing the work yourself. Fast Track Remodeling really does manage it all.
So give us a call today at 832-742-9992. Again, that's 832-742-9992, or reach us on the web at fasttrackremodeling.com.
You found or inherited a great investment property. Problem is, you don't know how much it's worth, or more importantly, what to do to maximize your investment while mitigating risk. This is exactly why we started Next Gen Appraisals. Next Gen is a group of appraisers specializing in investment real estate. We understand that investors aren't just looking for a number of what their property is worth, but a comprehensive analysis of the market. Give Next Gen a call at 713-346-9911 or check us out online at nextgenappraisals.com.
Are small returns getting in the way of your retirement plans? Why settle for mediocre results? There's a better place to invest. The experts agree. Single-family real estate is one of the best investments you can make. Find out how JB Fund Services offers a 9% preferred return and up to a 13% waterfall.
Nathan, I will drop the article in here from Dr. Collum. I always reference this thing. It is brilliant.
This investment is offered to accredited investors.
Back up here.
This is Business 1110.
Oh, yes, sir.
All right, hot mics.
All right. You got to admit the irony. Rage Against the Machine on a show about creating wealth. I mean, just hilarious, right? I always thought it was funny when they would, before Glenn Beck went really crazy, he would play some Rage Against the Machine for his bumper music. And I thought, you don't really know these guys, do you? It just sounds cool, right? Anyway, I posted that article on the Facebook feed for this show. Dave Collum's article, Collum, fantastic article. It's his 2017 year in review. So let me explain what's going on. And it is totally cool if this does not make complete sense to you. And if it doesn't, that's totally fine. It makes sense to the economist nerds that I hang out with. But if it doesn't make sense to you, that's totally fine. But I'm going to explain it again, and hopefully there'll be some clarity here. The stock market, when it quote crashed, I use that term lightly, in 2008 and 2009. I can't remember. It was November, October. We started seeing the slide, and it took 4 or 5 months to really collapse. During that time period, two things happened. One is we had we had a fiscal stimulus and a monetary policy to prop the market up. If y'all remember, there was a transition there between Bush, W, and Obama. In fact, as the transition team was getting ready to assist Obama into the White House, Obama and W were meeting about this financial issue. And they essentially supported if I remember, it was either $700 or $900 billion fiscal stimulus package called the Omnibus program. And it came right around as we were switching from one president to the next one. So that would have been a tail end of 2008 into 2009. About $900 billion, somewhere around there, to prop the market up. And then the Fed and the Treasury stepped in to the tune of a couple $100 billion and then to like $50 or $60 billion a month for years. It's trillions of dollars have been injected back into our system in for all intents and purposes in cash. That did not allow the market to follow its normal market cycle. At some point, we are going to have to go back to a normal market cycle. And when that happens, it's going to be ugly for stocks. It's going to be ugly for bonds. But I'll tell you, it's going to be great for real estate. I think real estate has been, single-family real estate in certain submarkets. I'm not saying all single-family real estate. Certain submarkets of single-family real estate have not been allowed to appreciate as much as they should. Meaning, I think there is a lot more price appreciation coming in the future. It's just my prediction. In fact, we've already seen it in the last 5 years. We've got submarkets in Houston that have appreciated 15% a year. By the way, over 5 years, that means they double in price. If you guys want more information about how to be a real estate investor, how to expose your personal net worth into growing your net worth into real estate, go to rightpathrealestate.com. You can sign up there. We have free events every week. Just come on by and see us, rightpathrealestate.com. Weekend retreat is not this weekend, but next weekend. That's how we share what we do in real estate, how we've built it. You can go to rightpathrealestate.com, sign up there as well. Thanks for listening, guys, and I will see y'all Monday. We will continue this discussion.
All right, Jay, have a good one.
All right, you too. Thanks.
When I say Italy, what comes to mind?
Venice. Capri. Oh my gosh, Capri was marvelous.
The views, the cliffside.